Are you ready to supercharge your wealth and unlock the power of passive income? Welcome to this episode of Dividend Discussion, where we embark on an enriching journey through the realm of dividend investing. Whether you're a seasoned pro or just starting out, this series is a gateway towards invaluable insights and firsthand experiences that will propel you towards financial independence. Join me as we dive deep into the minds of others in the dividend investing space that are eager to share their stories, mistakes, triumphs, and life-changing lessons. In each episode, we unlock the secrets of successful dividend investing, ensuring you can sidestep costly pitfalls and chart your own path towards financial freedom. Sit back, relax, and immerse yourself in this captivating episode of Dividend Discussion. Hello, and welcome to another episode of Dividend Discussion here on Dividend Obsession. I'm your humble host, Troy, and today I have the pleasure of speaking with KY. KY, if you wouldn't mind giving yourself a brief introduction and telling the people a little bit about yourself.
Sure. Hey, everybody. My name is KY Kwan from China. I was born and raised here in Hong Kong, China, but I also studied in the US for a little bit. So I was exposed to both countries' cultures and also stock markets for this interview's context. I also invested in Chinese stocks, Hong Kong stocks in particular, for the last 2 or 3 years. And most recently, within the last 2 years, I got more into US stocks. And I also joined different dividend investing groups on Facebook. And that's also how I met Troy through one of the posts. So that's how we linked up. And I'm so glad to be here. So thanks for inviting Troy.
Yeah, no problem. So I know people, I just had an interview with Dividend Dave, and he's from Canada.
Mm-hmm.
What are the tax situation? Yeah, what does the tax situation look like for like you being in China holding United States stocks?
So the deal with that is whenever I receive a dividend from a particular stock, 30% of that will be deducted immediately. But then after each tax reporting season, I will get 5% back. So I'm assuming I get 25% instead of 30% deducted from my stock dividends, as opposed to like you guys local U.S. investors, which would get what 30% off.
Okay,
so that's what from what I understood.
So that's not too bad. Yeah. And like, is the difference between the United States stocks, like the return, like the capital appreciation, is that, I'm assuming that's worth it to take that tax hit?
Absolutely, and also because I would say, like, from my limited knowledge and experience, exposure to both stock markets, definitely the U.S. market is more diverse and also has more traction. Definitely, I mean, the U.S. market is where it's at.
I had an interview with not Dividend Dave, but with Dave Maloney, and he's in, I forget where he's at now, but I know he's from Australia, and he was talking about the Australia stock market, and he goes, we don't realize how much we have it made here in the United States with like our stock market and all the opportunities and stuff like that. So it's cool to, you are now going to be the third outside the United States person I've interviewed. So this is really cool. We're going worldwide out here is what we're doing. So
lovely. What an honor. Yeah.
Okay. So first question is, when did you begin investing, and what got you into dividends specifically?
Sure. So I started investing basically around 3-4 years back, basically right before the beginning of the pandemic. I don't know if it's destiny or what, but I mean, I started investing because my mom is quite a seasoned investor in Chinese stocks. So she always told me about, son, like, even though, you might have your career plans, you should also begin investing, because who knows what will happen to this world. You might want to have, extra income, passive income. And then a few months after she told me, to start looking into it, the pandemic hit us really heavily, not just, in China, but gradually globally. Mm-hmm. So I started investing more in Chinese stocks, following my mom's footsteps. However, of course, there would be some sort of generation gap in terms of investing strategies. Mm-hmm. Slowly, I found out that it may not, like, Chinese stocks may not be something for me, and I quickly diverted my focus to U.S. stocks, mostly also because I still have quite a lot of friends, classmates from my college years, master years, and spending around 5 to 7 years time in the U.S. Gives me quite a detailed idea of how the U.S. Different companies in the U.S. Operates, hence the stocks. So that's how I started investing more heavily within the last 2 years in U.S. stocks and in dividend stocks in particular, because I think again with the uncertainty that's happening in this world with the pandemic and also geopolitical tension, it's much more stable and safe, in my personal humble opinion, to invest in dividend stocks. So right now I have around slightly more than 50 stocks, and only one or two are not paying dividends. All the rest is paying. So
wow, that's pretty okay. So two questions off of that. One,
sure.
I'm gonna ask them both because I'm gonna forget the questions, so I'm just gonna ask them both, and
Yeah,
hopefully we can remember them. So first question is, since you start, because excuse me, I started like after the pandemic, as far as like March hit. I think I started in like May, June of 2020. So like,
Nice.
did the impact of the pandemic, as far as you starting right before and then quickly losing a good chunk? I mean, obviously you didn't have a ton of money in, but like losing a good chunk of your money right off the rip, did that like dissuade you any type of way where you're like, man, I don't know if this investing stuff's what, like I just lost a bunch of money real quick, all that stuff. So that's first question. Second question would be, do Chinese companies pay dividend stocks too? Or do they pay dividends as well, I should say?
Sure. So to respond to your first question, definitely I was, very, very pessimistic when it came to my, especially the beginning stage of my dividend investing journey, right? Like you said, like in early 2020, that's when the pandemic hit, and major stock markets, not just in the U.S. but around the world, right, like collapsed. So basically, no one would be able to earn money immediately when the market went down significantly. So I was so helpless, and I, of course, my as my investing mentor, my mom told me, hey, hold on to the stocks, because markets go up and down. It's all I could say to you, son, is that you enter at a very terrible timing. But if you don't sell, then you don't lose, right? And invest in those dividend paying stocks, and you'll still get your return in the mid to long term if you make the right investment decisions.
Wow.
So I listened to my mom, and gradually, like it slowly came back.
Yeah, that's
and
big. That's because that you avoided a big mistake there. One, you got started because of your mom, and then two, your mom was the angel on your shoulder saying, "Hey, I know this looks bad, but like keep going with it." So that's really important.
Absolutely. So it was all her who was having my back in this journey up to now. Although she's giving more and more trust in making my own investment decisions. So I can be more thankful for that.
Yeah.
But to answer your second question, whether Chinese stocks pay dividends, yes, absolutely. But I wouldn't say as many as U.S. stocks.
Okay.
And also here in China, there are two types of dividends. So one is cash dividends, and the other is like stock dividends.
Okay.
So sometimes when companies pay you dividends, they will pay you more shares instead of cash. But so far, I haven't found anything similar in the U.S. I don't know if I'm too.
They have it, but it is because I did a video forever ago when I was like digging into dividends myself. It was one of the first videos I did on the channel of like what are dividends, different kinds of dividends, stuff like that. And there's a lot of different kinds of dividends here. I think there's like 4, if my memory is right, like 4 different kinds of dividends you can get, because you obviously have your qualified and non-qualified dividends, which are still in the form of cash. But there are stock dividends, and I think there's at least 1 or 2 more that I don't like. They're just so few and far between, and I don't focus on them. So I don't look into that. So with the stock dividend, do they keep adding more shares to the company? Like, say at one point the company A had 1 million shares available. When they issue a stock dividend, do they go up to 2 million shares, or do you get just a bigger ownership of the, like, how does that work? Do you know?
That is something that I don't know about. but is there a way to track it,
I
like
don't know.
in
I
terms of
mean,
the
if you
stocks?
know of any like specifically Chinese stocks, if you know of any, you could look into that company specifically, and then you could just
Okay.
try to find out, like, I don't know, maybe look it up on the internet to try to find out like the number of shares that they've had outstanding over courses of time, and you'll be able to see if it's going up or down.
Okay.
Because I know you can do like in the United States, they do like there's some companies that do like share buybacks, and people are on either side of
Right.
that
Right.
where there's used to be a million shares, now there's only 750,000 or whatever, and like
Mhm.
that's good in a case that you now become a bigger owner because if you own 10
Right.
shares of a million and now you own 10 shares of 750,000, you own more of the company. But what some people don't like about that is sometimes the companies will decide to buy back their own shares when the company is deemed to be overpriced.
Right.
Some people are like, oh, I'd rather you keep that money or give it to me in a dividend instead of buying your company or buying your own shares when it's overvalued. So I mean, it's
Right.
a
Right.
catch
Right.
22 with that, but yeah. So I mean, I am curious about that. I might have to look that up for like United States stocks too, just to see. Like I said, I don't even personally know any companies that do that. Every company I know is either qualified or non-qualified. It's all cash.
Right. Right.
So yeah, I might look that up too. That's interesting. Huh.
Yeah. Yeah. I mean, that's the major difference that I found between the two markets. Yeah.
Okay. Cool.
Yeah.
Okay. So do you have? I know you said that your mom was there to help you not make many mistakes, but I'm sure you've made your own
Right.
mistakes. Do you have a
Absolutely.
biggest dividend mistake, and what lesson did you learn from that?
The biggest mistake is actually one of the most frequently mentioned mistakes on different dividend investing Facebook groups, and that is chasing yields.
Yep.
Uh, yeah, when I first started, I mostly, because with limited capital, right? I would definitely opt for buying cheap stocks that pay lots of dividends,
Mm-hmm.
hence chasing yields. Without analyzing, too much of the stock, the company behind, the management, et cetera, all the metrics, but just solely looking at dividend yield and the price. So that got me, that took quite a toll on my capital in the very beginning. Yeah,
Mm-hmm.
I would say it took me quite some time, almost double the time to recover the loss.
Yeah, yeah, and I always say here on the channel that's often
Yeah,
what happens is people will be excited over the $75. This is just made up numbers, but the $75 put in your left
right.
hand, but then they don't understand that they're losing capital. They're losing $100 in their right hand. So the company's
Exactly.
almost doing like little magic tricks for you. Like, don't look at your right hand, just look at the left hand. Look at the dividend we're giving you. But like in the long term, you end up having less money than you used to have. I mean, a
Exactly.
stock I always pick on is AT&T, but that's a prime example of it. Dividend yields around like 7%, something like that. But then, like,
Right.
if you look at their chart over the last like 20 years, like it's just down. Like that's all it's
Slowly
doing.
go
So, uh,
downhill. Yeah.
um, and then like realizing that, and then also, just understanding when you need the money. Like it's really cool to see a big jump in your dividend income today, but
Right.
like typically big jumps either because of you adding a lot of money, which most people don't just get a lot of extra money every year, or they're because your yields are really high and you'll get that big jump once, but it's going to end up reducing over time when you need the money more. So like that was my strategy. Like I think my portfolio yield on average is like 2%. And
Nice.
that's really boosted by two stocks. I have AbbVie and ExxonMobil that are like above 3.5%. So like they really boosted. I have, Apples and Visas and stuff like that the yields are really low. But I don't need
Right.
the money for 22 years. So like I'm just trying to grow the capital as much as possible. And if the dividends received from Apple or Visa is enough when I need to retire, perfect. If not, I'm going to take the dividends and the capital I gained from those companies and put it into something that does yield higher. And you just
Way to
do
go.
that. Like, I don't know. It is hard because I went through the same thing. Like I told this story on here before where I'm really analytical. So like I like to dig deep into stuff. And I basically backwards calculated dividend yield on a spreadsheet where I was like, okay, if I put $100 into this stock, how many cents will I get per $100? And I didn't know
Right.
that there was already a metric for that. So I thought I was onto something, but I mean, the stocks at the top were your Verizon's, your AT&T's, your REITs, stuff like that. So you're not alone. I think everybody on here that said one of their biggest mistakes is chasing yield. So I don't know why it's so attractive for us new dividend investors, but it gets all of us. So
Absolutely, absolutely. Because what I have gradually learned is that we all start from somewhere, and
Mhm.
we can slowly snowball the dividends
Yep.
up, and that will look very attractive, especially in the mid to long term.
Hmm.
But at the very beginning is tough for everybody, right? Because okay, we start from, well, except for an exceptional small amount of people, we mostly start from a very small amount of capital,
Hmm.
hence small amount of dividends. But we always have to stay in the course, right? And always remember that it's a marathon, not a sprint. Like a lot of seasoned dividend investors who share their experiences. So
Yeah.
that's something that we have to overcome in the beginning. But once we start and slowly getting into our grooves, then things get a lot easier.
Yeah.
I would say, yeah.
Yeah. It is really hard to stay motivated in the beginning because of how small the amounts are. So
Right.
I mean that's a challenge with it, but like I've said before, that's the importance of tracking your progress, like having a spreadsheet or something that you can see. Okay, last June I made 25 cents. This June I made $1, and like seeing the percentage, like that's a 400% increase. You're not gonna,
Definitely.
as those percentages are really big, you're gonna be making small amounts. But as the percentages get smaller, the amounts will get bigger. So you can transition your focus, and that's how I keep motivated personally. So that's pretty big.
Awesome. Awesome.
Okay, next question for you. So when
Sure.
you started right before the pandemic versus
Mhm.
now, how has your investing style changed, if at all, since from then to now?
Sure. So at the very beginning, because the pandemic was all about like healthcare, vaccinations, pharmacy, etc. So I was mostly looking into those stocks. Also suggested again by my mom that like those stocks would definitely increase, if not skyrocket, because of the ever increased demand in like people getting vaccinations all around the world.
Mhm.
And at that time, we're talking about like 2 to 3 years back. Most countries still have some sort of quarantine requirements, right?
Mhm.
And in addition to quarantine requirements, they also require any inbound, whether tourists or locals, to get vaccinated. So that means a huge demand for everybody to get multiple, vaxxed. So definitely that helps with sales revenues for major pharmaceutical companies. So I mostly start off with like Pfizer, uh, Moderna, those companies, and I mostly looked into start looking into ETFs.
Mhm.
I was very fascinated about the idea of having a basket of let's say blue chip stocks
Mhm.
that give me a lot more stability and reliability over the course of time. So at the initial stage of the pandemic, I was mostly into like pharma stocks, and now more into ETFs.
Okay. Yeah,
Yeah, so that's the strategy.
that's a really good way. Like ETFs are such a great way. I always my non-professional suggestion to people that aren't into dividends or into investing in general is just get started with an ETF. One, you're invested, you're getting money in the market, and then
Right.
two, sometimes those ETFs, like maybe you get curious and you're like, oh, what companies make up this ETF? Like, what's the biggest holding in this ETF? And you'll start to dig down, or you're like, you'll notice that a lot of ETFs will pay a dividend, and you get a dividend. You're like, what is this? What's a dividend? And you start looking into that, and it's a really good way to do that. And I know a lot of people that, for simplicity's sake, do get rid of some of their individual holdings over time, and they just go into ETFs because at the end of the day, like. I don't know. It doesn't seem to be everybody's goal, but my goal is to beat the market. And sometimes,
Nice.
it's just it's so hard to beat the S&P 500. Like, why am I wasting all this time to try to do something that seems nearly impossible over the long term? Why don't I just own the thing that everybody's trying to beat? So I
Sure.
like the ETF strategy. It's pretty cool. I only hold ETFs in my Roth IRA because like I have my individual
Oh,
account,
okay.
that I have all my my individual holdings in. I think there's 11 of them in there, and then my Roth
Nice.
IRA is 6 different ETFs, and only one individual holding. That's Tesla's. They don't pay a dividend, but so yeah, I mean, I do that because it's hands off. I just put my $6,500 in there a year, and call it good. Just put it in the ETFs and let it ride. So
Exactly.
I like that. Okay, so do you have any short term and long term goals with dividend investing, and what are those?
Sure. Short-term and long-term dividend goals. You mean in terms of amounts or like?
Yeah, anything. Yeah, is there a certain amount you're hoping to hit this year? Is there, something that you're trying, like a certain number of shares? Are you trying to get a certain, amount per holding as far as like cost invested in each holding, or like, and then long term is like, are you trying to get the, I don't know, $100,000 a year in dividends or whatever it might be?
Gotcha. I think my there are around 2 or 3 goals that I'm trying to hit by the end of this year. One is I'm particularly looking into 2 stocks that I try to significantly increase my holdings in. One is one ETF that a lot of people have mentioned in different dividend investing groups, SCHD.
Mm-hmm.
So right now I have around slightly over 100 shares. I'm trying to
Nice.
boost that into like double of that amount, so 200 shares by the end of this year, ideally, right?
Yeah.
The second one is this REIT stock called I think it's called Realty Income
Yep. Stock
with
ticker
the
O.
ticker symbol of O.
Yep.
Yes, I only learned about it through the Facebook groups, and I've dived into it a lot more since studying about the stock, the fundamentals, the management, and the news coverage, basically. So right now I have around, I think, half 100 amount of shares, but again, I'm trying to double that to 100 by the end of this year. Yeah, so hopefully that would, yeah, those goals will be met. And in terms of amount, I try to reach maybe, I want to reach 20 to 25% of increase of total amount compared to last year.
Okay.
Yeah, so last year I had around 2,200. So this year I'm trying to hit like maybe, yeah, 2,800 or 3,000.
Yeah. That's really cool.
Yeah.
That's cool to have those goals. So those would be all your short-term goals, right? Like what do you think
Yes.
the end, are you trying to get enough dividends that is your retirement, or are you just trying to get enough dividends that you're it's a really good like supplemental, like you still have your job, you still work until however old you need to work till, but you have like the $40,000 in dividends that you can take vacations and do whatever with. What's your goal there?
Definitely the former. Yeah, I would love to retire on dividends someday.
Mm-hmm.
I mean, whether it's 20, 25, 30 years from now, ideally the sooner the better. But yeah, to retire on dividends and spending dividends on travels, future medical costs, and whatnot, miscellaneous costs, or maybe on kids' education,
Mm-hmm.
right? That would be something that I hope for.
Yeah,
Yeah,
that's a
for the
really
long
cool
term.
goal. Yeah, and the thing is, like you were mentioning earlier, it's the compounding and the snowball effect
Right.
of that, where like it
Definitely.
might only be 2,200 this year and maybe 3,000, or 2,200 last year and 3,000 this year, but like eventually that 3,000 is going to turn into 4,500, which will turn into 9,000, which will, like it just it once it picks up steam. From what I've heard, I've talked to it, like Jeremy is at
Oh
the
yeah.
point where
Yes.
he, he's doing pretty well in dividends. I think he said he can already replace his wife's income. Rex is the
Nice.
interview that's going to be coming out tomorrow when we're recording this.
Oh,
And
lovely. Okay.
he's already got the financial independence, retire early, so he's already fire. And he's trying to go for fat fire, which is I think 50% more than it, like if you need 100,000, he's going for 150. So
Oh
once he
man.
gets to that, then he's like, he's taken care of. Like not only are his expenses covered, but he's got extra play money for whatever he wants to do, whether that's travel or getting tickets to a game or concerts or whatever it might be. So that's really cool. And I mean, for me and
Absolutely.
you being younger, on the younger side of it, like it's really important just to stick with it. Have your plans, have your criteria that you pick your stocks for, and just keep your head down and get things done. So
Exactly. Keep hustling.
yeah,
Yeah.
I like it. I like it. Okay, so I mean, you might, because of your relationship with your mom, you might actually not have too many regrets on this. But do you have any like stocks that you regret selling, or stocks that you bought that like a buying brag, where you bought it really low, or maybe your mom suggested it to you, or you found it when it was cheap and now you're up 50, 60, 70% on it?
There's this stock called with ticker symbol WM, Waste Management.
Yep.
I think that's the name of the company.
Yep.
That I invested that was the very first U.S. stock that I invested in.
Wow.
I first bought a few shares only. By a few, I mean less than 10 shares at the very beginning, without doing much, research on it. I only, went to his website and I thought to myself, like waste, there are wastes everywhere.
Yep.
And even with like all the technology and technological advancement with AI and all that, waste will be here to stay. So a company like that, that organized and with that scale,
Mhm.
would remain, a very important company in decades ahead. So I bought it, and then after analyzing further, I found that it has always been a very stable stock, paying stable dividends, if not increasing dividends over the years. So I bought a lot more, like close to 100 or 150 shares.
Mm.
And that was for the longest time, that was the major stock in my portfolio. And then the pandemic hit again. So it also dropped like most stocks.
Mhm.
It wasn't dropping as much percentage wise, but it dropped quite a lot, right? So my biggest regret was I sold it all.
Wow.
I sold it all because I thought, there seems to be a never-ending downward spiral that's going on with the pandemic. No one knows what's going to happen every day. When I tune into the news, the market dropped for like 3 to 5%, and that's huge, right? So that's the biggest regret. I mean, right now it has regained its momentum, and I've been looking for different entrance points, but it's not as easy.
Yeah.
I would say, yeah. But that's my biggest regret.
Yeah,
100%.
that is something because I mean so I mean you did end up going through all the stuff that us normal dividend investors go through where you even though you
Definitely.
had your mom in your ear telling you, hey, things come back, and you started, first of all, identifying a good company like that off the rip is very hard because most people,
Yeah.
the first companies they buy are not anything to brag about. Like if you sold your first company that you bought, it's probably a good thing. I know it
Yeah.
would have been for me. I think mine was like ARCT or something like that. It was
ARCT. Okay.
Arthropeutics Holdings or something like that. I bought was my very first stock, and it was other than the Sirius XM, which I got for free, which is how I started on dividends. But it was
Oh, nice.
yeah, it was yeah. That's kind of unfortunate for you. You bought less than 10 shares, and you bought over 100, 150 shares.
Yeah.
Do they have? Are you able to do fractional shares there or no?
No, only wholesale,
Mm,
whole shares. Yeah.
yeah,
Yeah.
that is a little bit of a barrier. So you guys don't have access to like even like Robinhood?
No, because from what I understand, even though I've heard of Robinhood for quite some time, it does require a U.S. number or even the social
Oh,
security number for authentication.
okay.
And it was mostly focusing on the domestic U.S. market. I think it briefly expanded into the Canadian market, but or maybe somewhere in Europe, but definitely not in Asia,
Okay. Yeah, I
or
was
not
wondering
yet.
because
Yes.
fractional shares are so. I mean, I've only been around since fractional shares. I actually started right when fractional shares were becoming a thing because
Right.
of I was on Robinhood. That's how I first started, and I remember getting on the waiting list to be part of fractional shares. And I know
Nice.
saw other people that already had it, but I remember being on the waiting list, and I don't know if it was just like something they weren't ready to turn it on, and it was they had like 7 people working and there was a million people waiting to get on it, so they had to like individually go in there and make it accessible for your account or something. I don't know, but yeah, fractional shares are huge because I mean if
Yeah.
you or anybody else follows the channel, I mean I buy literally $7, $8, $9, $10 worth of a stock each day because I don't know, like I don't like timing the market. I don't like trying to find a good entry point. So if I identify a stock or a group of stocks like I have, I'm just like, hey, I know I want this stock. I know I have a little bit of it. I know I want more of it. I have to buy it. Like I just buy it because my goal is 22 years from now, I'll be 50. So in 22 years, I believe all my companies are going to be worth more 22 years from now than they are today. So like I don't care
Nice.
whether I pay $91 today or $89 today. It doesn't make any difference to me. Like it's going to be worth $200 in 22 years. So what do I care? So,
Lovely. Yeah. Yeah.
because I know there's just so many people that end up doing the, they worry about certain prices. And what that does is you might get that price, but what it might do is it also might cause you, like, say you're waiting for Apple, and obviously this isn't where Apple's at, but say Apple is $100 and you're waiting for Apple to go down to $98. What if it never touches $98? Then you never own Apple, like one of the greatest companies in the world. You never get to own it because you were waiting for $2.
Right.
And then you, like, say it goes up to $150. Now, instead of owning it 100 and going to 150, you wanted it for 98 to go to 150, but now you own zero. So you went from nothing to nothing. Like, so that's what I'm always afraid of. So I'm like, I'd rather just own it a little bit more expensive and at least get the gains. So I don't know, to each their own. But yeah, that really stinks that you guys don't have those fractional shares, because it lowers the barrier to entry so much. Because, like, if you have, imagine if you wanted, I don't know if you know about Berkshire Hathaway, which is Warren Buffett's company. Yes. Yeah, like, imagine trying to save up to get a share of that. That thing's like $500 and something $1,000 for a share.
Yeah.
Like,
how for me to
enter. You would never get that. Like, you would never be able to own that.
No.
Yeah, that's wild. Yeah.
With fractional shares, though. Yeah.
Yeah, with fractional, I can buy a dollar of it on Monday if I wanted to. But I mean, it's pretty something. So, okay.
They should introduce that to the Hong Kong market sometime soon.
Yeah, bring it in. Yeah, tell them, like, hey, we need this.
Yeah.
Okay. So, I mean, we touched on this a little bit earlier, but, like, do you have, has there been any dividend milestones that you've reached or achievements that you've accomplished? And, like, what role did those play in keeping you motivated, like letting you know you're on the right path and, like, this thing's for real?
Sure. I mean, when I first started investing, I also encouraged my wife to invest as well, and so we're sort of like having this unofficial, like, competition with each other, and be like, oh, let's see who will have $100 of monthly dividends. And I remember that was right before she got pregnant. And right after we knew about her pregnancy. Of course, she mostly, spent her time in preparing for baby's births and, arrival and all. So that left me with the remaining of the investing journey. So I kept, telling myself that, hey, we still had this thought of, reaching $100 a month, this goal in mind. So I kept, investing, dripping in stocks with dividends that I receive. And that first milestone was reached probably a year and a half ago. And it was such a joyful moment, because it's something that I was quite serious about with my wife at the time. And then she sort of left the game because of nurturing our baby, and I was the only one left in this game. But then I helped us achieve that goal, and so it was very happy.
Yeah, and that's kind of like the justification that dividends can actually do something, because like you were mentioning earlier, like, it's a bunch of small amounts here and there, like, it's not super consistent. Some of them pay quarterly, so, like, you'll get something every 3 months, but the amounts being small, the infrequent, like, stuff like that, you're like, this is cool to get $6.32 from this company, but, like, is that ever going to mean anything? And then now you got to the point. I mean, if you're gonna make $2,400 this year in dividends, like, or if you made $2,400 last year, you're at $200 a month. So exactly, like, you're doing really, like, that's to the point where you can look at your bills and look at what you're paying and be like, hey, this covers this bill and this bill.
Right.
So that's pretty
Netflix
cool.
subscriptions and all that, Disney Plus.
Yeah, that's pretty cool. Yeah, and I talked about that last weekend with Dividend Dave, and it was like, I think it was last weekend. Anyway, I talked about it, and it's like, it's not that we're literally taking that money to pay those. It's just figuratively knowing, like, hey, if I ever had to, stop doing whatever, I can literally turn off the drip and use this money to support these things for the rest of my life.
Absolutely.
Which is really, really cool. So I do like that. And that's what keeps me motivated too. I have a tab on my spreadsheet that talks about all my bills, and then I literally can go through each month and be like, okay, I made $101 in May. Like, okay, that pays this one, this one, this one. And, like, the goal is to, move down the list to get to the biggest bill, which is my mortgage. And then once that one's paid off, try to get to my mortgage and my smallest bill. And then you try to pay both of those, and the mortgage and the next smallest bill and stuff like that. So, yeah, that's pretty cool. I like that. So with that being said, like your goal is the same as mine. You want to get as many dividends as possible to hopefully retire off of the dividends and passive income and not have to work, and you just, get free money.
100%.
So how will you know? I ask this question because I always struggle. How will you know when enough is enough? Like, how will you know when you don't need to work anymore and you have more than enough? Like, because the issue that or I know I'll have, is that compounding effect where like I can go from, the year I'm going to retire at 50 years old, I can go from making $60,000 that year. And if I wait one more year, I can make $72,000 just because of the compounding. And if I wait 2 more years, I can make $90,000. So like, when do you know it's like, okay, this is enough, I can stop?
So the thing about investing or like about finance in general here in where I'm living currently, Hong Kong, China, is that people here almost never retire figuratively. So for those who have basically like retired from their like corporate jobs or full-time jobs, they still invest a lot. And so what I understand is that it is really hard to say like Troy, you're saying like when is enough, right? Like it is almost never enough. However, to me, like I would say if the amount could basically 100% cover all my day-to-day expenses, my family's expenses, plus maybe I would say a 4-digit US dollars extra for medical expenses, then I would say, okay, I feel quite comfortable, right? Because if that amount is used on, for hospital visits, fine. If not, then probably we could use that for traveling. So that would be the definition of enough for me. But I don't think I would really have a stopping point where I'll be like, oh, okay, like I could really live comfortably now with this amount every month or approximately.
So when you say 4-digit, you mean like 1,000, like $2,000, $1,000?
US dollars. Yeah.
Okay. Yeah, so that's extra. I mean, that's a different, like that's a way to think of it too, is because I mean at the end of the day we want to 100% cover, and so basically the question's always like, if there is a stopping point, is there a certain number over 100% that you're going for? Is it like, okay, not specifically to you, but like that's the question I try to ask myself. Like, okay, is 110% of my expenses good enough? Or is it 150%? Is it 200%?
Right.
So like I'm just trying to figure that out, and like maybe by the time I'm 49, 50, and I'm creeping up on the age that I want to retire at, like I'll just be like, hey, like I'll take 110%. I'm good. Like I don't need any more of this. Like we're okay. And like I was talking in previous interviews before too, is like kind of what you were saying about people in Hong Kong like never really retiring. The goal for me is to get to the point where I have enough dividends to live off of, and I can still work, but doing something that I enjoy doing, whether it's helping people or it's a job that I've always wanted to do, but it never made enough money for me to do it. I can do that job because I don't need the money. Like I'm just doing it to keep myself busy and like help people or, get that self-fulfillment and stuff like that. So I think that's one thing that, one of the many things that dividend investing offers is the ability to go out there and, support people and do what you enjoy doing versus like needing to do it for the money. So that's really key.
Absolutely. Also, one thing I want to add is that, like, through the pandemic, what I learned is that, like, a lot of us might be going through like mental issues. We would all have, our down days, especially when, people around us got sick or even like passed away. So the beautiful thing about dividend investing is that whether like it is quite independent from our emotions, right? Like once we invested in those stocks, dividends would come in whether on our happy or unhappy days, right? So in that sense, like the income, keeps coming in, and we could, still have our day-to-day lives back together. Like, so yeah. So that's what I like about it.
It's that stability in your life when everything's so like unstable. The dividends can offer that stability where it's just like, okay, you're sick, you're healthy, you're having a good day, a bad day, you're getting paid on a Monday, a Wednesday, a Friday. It doesn't, like, there's always there's the dividend you can count on. And like as those dividends grow and stuff like that, it becomes more of a crutch that you can lean on. Like, okay, I know I have this like, oh, my boss said whatever at work and it made me really mad, but Waste Management or Apple or ExxonMobil or AT&T, they're all paying me. Like I'm still getting this $95 from whoever. So
You
that is
got
really
it.
cool. And like, the one thing I've noticed is like I get paid on Wednesdays at my job for whatever reason, every other Wednesday,
Nice.
instead of Fridays, which I don't know why they do that. But anyway, I get paid on Wednesdays, and it's really cool to look at like the calendar of when I'm going to get my dividends and be like, oh, okay, I get paid on this day, but I also get paid from Apple on Thursday, and I also get paid from whoever, Microsoft on Wednesday, and like you get to look through and be like, okay, how many paydays do I get this month? Like I get 2 or 3 from my job this month based on when the Wednesdays fall, but then I also get 4 or 5 dividend paychecks, and I'm like, I'm getting paid 8 times this month. That's pretty cool.
That's a fascinating feeling, isn't it?
Yeah, it's really cool. And then I mean, I've made portfolios. I think I've talked about them here in the interviews before.
Yeah.
The get paid weekly portfolios. Some of those
Mhm.
are like the amount of work that went into creating those interviews is kind of wild, or not the interviews, those portfolios is kind of wild. But like
Mhm.
literally, it's just 12 individual stocks, and there's one for yield and there's one for growth. I like the growth one personally. But you buy the 12 stocks that are in there for growth, and every week something's gonna come in, and I'm like, that's super cool. Like literally
Super
every
cool,
week. And
yeah.
my stepdad he bought into the higher yield one because he's closer to retirement. And I asked
Nice.
him, I was like, hey, how's that portfolio going for you? He goes, it's every week. Like there's certain times where he'll look down on his phone and he's like, oh, I'm getting another dividend. Like, oh, what, all this money's coming in. Like, I'm like, that's a great feeling to have. Like you just have so much money coming in, you don't know what to do with it all. So that's a
Lovely,
that's a place
lovely.
we're all trying to get to right there. It's like, oh, another
That's our
dividend.
goals.
Yeah,
That's our lifetime
that's
goals.
Warren Buffett style right there. Okay, so I mention on my channel a lot my criteria for
Yeah.
picking dividend stocks and how simple it is. I wanted something that not only I could understand but I could follow. So, do you have any specific criteria that you use when selecting your dividend stocks?
I'm totally with you on this one, Troy. I mean, I'm trying to look for stocks that I basically have frequent encounters on. So aside from the pharmaceutical stocks that I first got into when the pandemic hit, per my mom's suggestions, again, like throughout my investing journey up to now, I always go for like day to day companies. So a lot of retail companies that I try to look at because like when I go uh, grocery shopping, then I know for sure like oh like there's so many inventories remaining versus a lot of meat or whatever vegetables have been uh, bought.
Mhm.
They're all emptied. So you would know, and you could also compare the prices
Mhm.
also, right? If you go there frequent enough, if you do like grocery shopping, like let's say for me, because I cook quite a lot at home, so I go at least twice a week.
Mhm.
So any price changes, I would notice almost immediately. So for example, last week when I was buying white rice, it has increased for maybe 15%, and that shocked me quite a lot. And I read the news, and it was because India was banning exports of their rice.
Oh.
So that caused a global inflation in rice prices. So yeah, so that's why yeah, that would be something that I always look into, like retail companies as well as like consumer discretionary companies like Procter and
Yeah.
Gamble. My wife always likes Unilever for some reason. I mean, the two are also really excellent companies.
Mhm.
Um, yeah, and there are stocks that it's just for me personally that I seldom touch or tap into, and there'll be I think so-called sin stocks, right,
Yeah,
in
yeah,
U.S.
like your
terms.
Altria and stuff like that. Philip
Exactly,
Morris.
or like there are stocks from like prison
Yeah.
companies or gambling companies. Those are companies that I usually stay away from. Um, yeah, but other than that, like and retail companies are usually something that I always look into. Yeah,
Okay.
like companies that I have frequent encounters with, so that I basically have more than a basic understanding of how they work, and how they progress,
Do you
etc.
do
Yeah.
you own any Tractor Supply Company, TSCO?
TSCO, you said?
Yeah.
I think I've heard of it. I've read quite some news about it, but
That
no, I
that
personally
might be
don't own it.
one for you. So that one meets like a lot of my criteria as far as like
Okay,
so it is in the retail space. Like they're really really big here in the
nice.
United States. And they I mean it's, tractor supply stuff. Like it's a lot of farming materials. Some people get their animal, vaccinations or medicines or food or whatever it might be there as well.
Okay,
And then a
let me
lot of like
jot down real
farming
quick.
equipment. Yeah, but the dividend growth rate on that thing is amazing. It outperforms the market. It has a dividend streak of paying and growing their dividends. So that's definitely one to at least look into since you like the retail stuff. That's one I don't
Thanks, man.
personally own yet, but that and then one my most recent buy is Costco. I don't know if you own
Oh,
that one.
Costco, yes,
Yeah,
yes, yes,
that thing
already.
is a tank. That thing's really good.
Yeah,
I like
that's a
me some
jam for sure.
Costco.
Yeah.
Okay, so you said that you have over 50 stocks, right?
Mhm.
Okay, so how important is staying diversified, and are there any rules that you use to like help you stay diversified? Like, do you like no more than a certain percentage in any one stock or any one sector, or how do you do that?
For me, earlier on during this chat, I also mentioned that I invested more in ETFs
Mhm.
recently. So I usually limit my number of ETF stocks to uh, less than 10% of my total portfolio.
Okay.
And my personal reason for this is because at one ETF stock already covers quite a lot of stocks itself, right?
Mhm.
So I don't need too many ETF stocks to cover so many different stocks, unless there's a particular reason for that. But for me, I think uh, it doesn't have to be too many. And for the rest, it would be a mix of growth and value stocks,
Mhm.
all dividend, mostly dividend paying. And recently, my other investing friends, because to give you slightly more background context, because Hong Kong is quite a financial city in China, so quite a lot of my friends also invest, whether they are in the finance field themselves or they have a full-time job in a completely different industry, but also invest with their side money. So some of my friends they also suggest investing in some banking stocks. So I also try to start a position in that, but for industries that I am not that familiar with, I usually limit that to less than 5%.
Okay.
And then anything in between, I just let it happen naturally. Yeah.
Okay.
So no more than 10% for ETFs, no more than 5% for any like unfamiliar industries, and then anything falls in between
Yeah,
for me.
that's a
Yeah.
different way to like. I'm really curious about people's diversification because like there's everybody I've talked to, like some people don't care about it at all. Some people really
Right.
care about it, like they have super hard and fast rules. And
Mhm.
then there's no right or wrong answer, and all of them are convincing. Like why you do what you do. Like I don't want anything more than 5% if I don't like if I want to be invested in it, but I don't know enough to like go all in on it. Like it makes sense that it's not more than 5%. And then also not having more than 10% of ETFs because it's already a big basket of funds anyway. So,
Exactly.
and then you're kind of like different with your investing style too because you have so many individual companies, but you also own ETFs. Typically, it's like one or the other. Like you have somebody that'll own 97 different individual companies and they own no ETFs, or they'll own two ETFs and like one individual company or something like that. So you're a nice mix of the both, which is a cool way to think about it too. So
Yeah.
with your and so another stock that I'll again not professional recommendations, but just look into it. I own Visa.
Sure.
You can
Oh,
look into
Visa, right?
Visa, yeah, Visa and Mastercard. Those are both like they're not technically banks, but they fall into the finance category. And I don't know. I personally think that they're better than banks because you don't have to worry about like all the other stuff. It's just like, hey, so and so spent $200 and they only paid me $100. Now we're gonna hit them with 20% interest, and you're gonna make money off of that. So,
Nice.
I own Visa. I know a lot of people that own Mastercard over Visa, but to me, I went with like what is in everybody's wallet.
Mhm.
Not the quote the Capital One commercials, but like the Visa. I have 3 credit cards, actually 4 credit cards if you include my debit card. and all of them say Visa on the bottom. All of them. Like I don't know
Oh,
many people
lovely.
that don't say Visa on the bottom. So like Visa is, I don't know how big it is over there, but it's huge here. So yeah, between Tractor Supply Company, you obviously you said you own Costco, and then Visa.
Yes.
You could look into Visa if you don't own them as well, or Mastercard. So it's either V as Visa or Mastercard as MA. So you could look into both of those too. Um,
Gotcha. And speaking of the popularity of Visa, yeah, I only own one and only one credit card, and that's Visa
yep.
itself. So
Yep.
yeah,
Yeah, they're
definitely popular.
worldwide. They're everywhere, and like if you look at like you can look at your mom's card. I mean, there are like the
Right.
American Express and the Discover and Mastercard and stuff like that. But like, I feel like even when I go to the store and that how they have those stickers on the door that says like we accept all these different payments.
Right. All kinds of payments,
I
right?
feel like Visa's always first.
Yeah.
Like just
Yeah.
stuff like that, like little things like that. Like you said that you noticed a 15% increase in the rice when you go to the store and stuff like that. Like I just
Right.
look for stuff like that. And I'm not really a big, consumer based investor. Like I don't do that specifically. Like I focus on the numbers. But like
Mhm.
one that I do is a big consumer is Starbucks. Literally every time I
Oh,
drive by a
yes. Right.
Starbucks, it is packed. Like you can't. There's one right by a red light when I leave the grocery store. You can't even like you have to get in the far left lane because the right lane has cars in it waiting to get into Starbucks. And it's like that every Sunday I go to the store and I'm just like, they're never not busy. It could literally
Yeah.
be 11 o'clock at night and people need to go to bed and they're out there getting an espresso. I'm like, how do you sleep? Like, like do you just have caffeine in your veins? Like what's going on? But
They're immune to that, I believe. Yeah.
yeah, it's wild. Yeah. So I mean certain stuff like that. Like I'm not really super big into the retail and stuff like you are, but like there are certain things that I notice, like whether it's the stickers on the doors saying that Visa's like, I mean, it could just be, that's how the stickers are printed and it means nothing. But I always notice, I've never seen a place that's like, oh, we accept Discover and MasterCard and American Express, but we don't accept Visa. Like I've never heard of that. So,
Never. Yeah.
yeah, but anyway, so with you having your diversification standards and stuff like that, do you have any favorite stocks? Like you'll go to bat for this stock all the time. You always try to, tell your mom or tell your friends like, hey, this is my favorite stock. This one's a winner.
I think Costco is one of them. Yeah.
Yeah.
I mean, I only got into it because one of my friends from the US, he recently changed his job into Costco in wholesales, and he told me that Costco is such a great company because I told him, oh, like I was thinking about Walmart or Target or Home Depot, big retailers like those, or maybe like is it called Dollar Tree? Like
Yep.
it's
Yeah.
like a
Dollar Tree,
discount.
Dollar General. Dollar
Dollar
General is the bigger
General.
like dividend paying stock, I believe.
Right, right. Yeah, I believe it was Dollar Tree that I was telling my friend, and he was like, "No, but maybe you should look at Costco because our company is really, customer oriented, staff oriented, and that's all that matters, really, like for a retail company, right? Like,
Yep.
let's say for Apple, you enter an Apple store, you could feel the vibe
Mhm.
immediately because like people are so passionate, they're helping you out, they're introducing you to new technology. You get all the inspiration, all the help you need, and as you exit the Apple Store, you usually have a big smile on your face,
Mhm.
and so that's the kind of retail experience that most customers would strive for, right? So he's like, oh, at Costco we offer you that. So from a personal first person experience sharing, then of course I believe my friend, and so I started investing in it. And the more I look into it, the more confident I am with the stock. So yeah, that's one favorite that I'm still owning so far. And when I introduced it to my mom, she's also quite convinced. Although she has only been to the U.S. once for my graduation, and I also brought her to Costco for groceries. She didn't have too much of a clear impression of it because she was only there for maybe less than 2 weeks time.
Yeah.
But then I introduced her to stock, and then she's also she also approved of my decision.
Yeah. Is that
That's
something that
nice.
you do you make that a, because I'm competitive. Like do you make
Mm.
that kind of like a game where you like try to find the next big thing and like get your mom to invest in it since she like helped you, when you first got started. Now you're like, hey mom, like I've been looking into this stock, like here it is. And like if she gives you that thumbs up, like, yeah, I like this one and she adds it, like does that feel really good for you?
Oh, 100%. I mean, because throughout the years, especially when it comes to investing, my mom always, she always shows the confidence in making those decisions, and she's also really not selfish about giving advice to people around her, and especially to me because I'm you know we live together, and she's close to me. Um, but then what is the reverse, right? I also feel that is a kind of achievement because I feel that I have sort of outgrown her influence in this regard, and also bringing new perspectives in her investing journey, no matter how seasoned she is already. So that's almost like convincing an expert to do something in his or her field, right?
Yeah.
So yeah,
Yeah, that's really cool.
absolutely.
Yeah, it's for me, I don't have too many other than like who I meet on social media. Like those are the people that know more about like dividends specifically than me, but like I haven't met many people, if any people in my personal life that do dividends or do dividends similar to like how I do. Like I've talked to some people that like, dabble in it here or there, and like they're actually investors, but like they don't really necessarily focus on the dividend side of things. So, and I don't really know that that's a good thing either. Like I never want to be the smartest person in the room when it comes to certain topics, because then like I don't know. It's the same when I go to the gym. Like I'm a competitive level power lifter, so like
Oh
I
wow.
always like to lift with people that are stronger than me. As I've gotten stronger, it's harder to find like the average person that's stronger than me. But like if I see somebody in the gym that's deadlifting 500 pounds, I'm gonna put 505 on the bar and I'm gonna deadlift it, and like just little stuff like that. Like I like to be competitive, so yeah,
Nice.
it's really cool that you and your mom have that relationship, and then like you're finally starting to educate yourself enough that you can actually use what you know and what you found to give her something. And if whether she gives you the thumbs up, like, yeah, I think this is a good buy for you, or the even I guess the top of the line would be like, not only is it a good investment for you, but she also likes to put her own money into it. So that's really cool.
Yeah, that's the ultimate goal, to convince her someday on
Yeah.
some stocks,
Yeah,
hopefully.
that's pretty cool. I like that. Okay, so are there any dividend related myths or misconceptions that like just really bother you to hear? Like they're not true and like you want to clear them up, and if so, what are they?
So I always, since the pandemic started, I've always heard about meme stocks.
Mm-hmm.
I don't know if you've heard about this. There's definitely a Reddit subgroup called Wall Street
Yeah, Wall
Bets,
Street
or
bets. Yeah, they
something.
talked about like GameStop and AMC and stuff like that.
Exactly. That I think there's also they also have a Facebook group on that. So I joined them, and so when I scroll through my Facebook news feeds, it always pops up. So what I always scroll past them, but then I couldn't help but also like stop for a few seconds to see like what people were posting about the meme stocks. So they always like uh, almost mislead me into buying them, but I always tell myself, hey, like these stocks are like fire, right? Like you don't want to touch fire,
Mm-hmm.
uh, and so better to stay away. But it's no harm if you could hold yourself together, but just look from afar, see what people are talking about, see what the buzz is. Um, so that's something that I've been noticing.
Yeah, and what's really important, like it's a lot of it is the psychology. So like I noticed this back when like crypto was, all the craze, and a lot
Right.
of people instead of like this, pretend Bitcoin's at $40,000 or whatever, a
Mhm.
lot of people instead of spending $100 to get whatever fraction of a Bitcoin that is, they would rather find some coin, some crypto that is trading at like a fraction of a penny, and use that same $100 to get a bajillion shares, however many pieces of that coin. And like it's like that with the way that relates to what you were just saying. It's like that with some of these meme stocks, because they are typically cheaper. Your penny stocks, stuff like that, and you can spend a little bit of money and feel like you have a lot of it. But the issue is like, would you rather own half a share of Microsoft, or would you rather own 2,000 shares of something that's going to go to zero, or like you're not going to make any money off of? So like that's the misconception, is like people get so infatuated. Like it was like I know so many people personally that would do that with the crypto, whether it's the Shibu Inu or whatever, Dogecoin and whatever. They can put in such a little bit of amount of money, get all these shares, but then it's not really worth anything. So you just have a bunch of shares of nothing. And I'm like, why don't you just put that same amount of money in something that's actually going to matter? So it's almost like that weird like mental game where these people are just like, oh, I own a bunch of something. I'm like, yeah, but you really own a bunch of nothing. Like that's the problem. And they do that with these meme stocks where they're, somebody will have a chart and they'll be like, oh, GameStop's about to bounce off of this and do whatever. Well, look over like pull out a 20-year chart on GameStop. You'll see the peak and then right back to where it was. Like that's what it does. Like those things, if you can get it right before it blows up, great, more power to you. But like, don't count on that being from your knowledge. Count on that being lucky. And I wouldn't personally do it again. If you bought GameStop at $2 and it goes to $500, don't think that you're the genius. Like think, man, I got lucky. I'm cashing out. Let me go put that $500 into something that's actually going to work for me. So I don't know. That's really what it is. And like I relate to what you said about like following Wall Street bets and then like looking at it. I do that with some like dividend groups that I'm in. I do that with some of them because I know that they talk about some lower quality stuff, and I try to understand like the psychology of it, one, and then two, I try to understand like sometimes there's video ideas in there. Like my Yield Max video that I got, it's my best video on my channel, and that was in one of the dividend groups I'm in where they were just talking about Yield Max, and I was like, I don't know what this is, I don't know what it does, but the dividend yield on TSLY is like 77%. And I'm right. I'm not a genius, but like I don't know any stocks that are 77% yield that actually worked. Like that's not sustainable. Like I know it's covered call and it's not like an actual holding or whatever, but I'm just like, I remember, I don't know if you remember a couple, I don't know, maybe 6 to 12 months back, everybody was talking about ZIM, stock ticker ZIM.
Oh, yes.
And it had like a 55% yield, and there was a bunch of posts on the Facebook group, hey, ZIM. And I'm like, God, if you need to look anywhere, like the thing that attracted you to it is the thing that should like get you away from it. 55% yield, do you think that's going to work? Like, has that ever worked? Ever in the history of ever? No, like AT&T can't support a 7% yield. And you think this company that you've never heard of before can support a 55% yield? I'm like, why would that make sense?
Yeah.
So.
Yeah.
But yeah,
exactly.
I
mean, yeah.
Go ahead.
I mean, the company wouldn't be able to support to give out that much of dividends without hurting their finances, or there must be some kind of calculation problems involved. I mean,
yeah. I mean, when the yield spikes that high, it's typically like a random, really fast drop in stock price.
Right.
So then the yield goes up, but then like in the next time that they have their meeting, they'll go through and say, hey, we have to cut our dividend. And then it goes back in line with their normal dividend yield and stuff like that. So like, I just don't like what you were saying before about you being a beginning investor and falling into yield. I did the same thing. It's like, that's really what it comes down to. And it's just like understanding, like, that's why I release some of the guides and stuff I release on the channel. Cause if I can help people avoid the mistakes, and that's also the point of these interviews too, is like, hey, you've done it. I've done it. Everybody else that I've looked at has or talked to has done it. Like if we can prevent just one person or two people per interview from doing what we've done, then I think that's a win, because we can make them hundreds of $1,000s in the future just by eliminating that 12-month period of their life where they're going to chase yield and it's not going to work. And that's really, really big. And then, at the end of the day, a lot of people need to learn from their own mistakes. Like you need to spend your own money. You need to lose your own money. You need to do your own thing to figure out it doesn't work. So, there's always going to be those people. I'm probably one of those people too. But like, that's a thing. So many people have done dividends. So many people have done investing. So many people have made a lot of money, and so many people have books or YouTube channels or whatever, where all these things, like you can learn what they've done and build off of that going forward. Like you don't need to start from scratch and do your own thing. Like you can be like, okay, this person did all these things. They were successful. I'm going to take those things and then add to that and make it better myself. So. Yeah,
100%, man. I mean, there's there's so many resources out there these days, especially with the internet and all the support groups. It's definitely easier than, let's say, our parents' generations when they first started into investing. For my mom as well. Like she had to read a lot of newspapers or go to different places to be in touch with people who might be familiar with the matter, mm-hmm. right? But now with we're just a few clicks away from all a plethora amount of information out there. Yeah.
It's really big. So with with that being said, last question for you. Pretend somebody's
Sure.
watching this interview and we convince them to start getting invested. So they already know they want to invest. They already know they want to do dividend investing. From there, what tips would you give them? Like what tips, tricks, things that you've learned, things to make them a good investor from the jump?
Sure. I only have two small advice, two small pieces. One is something that I mentioned before. Don't chase yields. Never chase yields because don't be fascinated by the numbers, right? But instead, we need to thoroughly understand what the company does, what their management is like, and also have a brief grasp of like how it previously performed throughout maybe the course of at least 5 years, if not 10, 20 years time, to have a clear idea of like, okay, how this company has strived through the recent turbulence and all. And I think for companies that have been paying, so that's the number one advice. Number two is again something that we have talked about. Always invest in companies that you're or industries that you're more familiar with. Start from there because I believe like when we first started off with our investing journey. The level of confidence does play a role in in making decisions. Of course, the objective analysis and evaluations and all the information sharing, resources sharing, tips and tricks on social media also helps equally. But then, if there is a huge difference between being confident or you're being very reserved about making decisions. I'm not saying we should throw in all of our cash immediately
Yeah.
at the very beginning, but then if you're confident about certain decisions or certain ideas that you have in your mind already, it does help build up that portfolio, right, to reach your short, mid, or long term goals faster and easier. So that's number two. The third thing is I would say go to a lot of like ask around people as many as possible, or also go to different websites and whatnot to look for information to help support your decisions. Because sometimes we find a company or a stock that we like that pays dividends and all. We might not know whether it's more of a gut feeling or is it really because the company is reliable. So I think going out, putting ourselves out there to reach out to different people, as many as possible, does help support your own argument for the decision. And the fourth and last but not least advice that I would give is like in retrospect, if I could be given another chance to start all over again, I think I would start with investing in more reliable stocks, the ones that are namely dividend champions, dividend aristocrats, dividend kings, even.
Yep.
Those stocks, because they have a really beautiful, very clear track record of like paying dividends over the years, if not increasing their dividends, through decades. So it's almost a no-brainer that you could invest, at least some of the starting capital into those stocks. And once you get the groove of it, once you figure out your own style, your own financial dividend goals, then it gets easier from there. Yeah, but that's about all the advice that I'll give. Just my 2 cents.
Yeah, I like what you said. Like as far as like having confidence, like what that does. I think that was your second point.
Second, right?
Yeah, your second point about having confidence is so big because like even in your journey when you first started, the confidence that your mom gave you that so like what this does is if I were to buy Apple stock, I identify why I buy Apple stock, I identify the company, I identify all the reasons I like it, my criteria, it meets all the things. When or if Apple stock goes down by 10%, if you have confidence in what you bought and if you have criteria with why you selected what you selected, when it goes down, you look at it as an opportunity and not a, oh, did I make the wrong decision? Like, because that's almost what you did with the waste management. Like you had a good idea, like you identified a stock, but you weren't confident in your decision. You didn't have maybe a criteria that you have now. And if you would have
Exactly.
had all those things, you would have said, hey, I bought this stock for a reason. Nothing's changed with the stock. It's just all the world events that's happening that's causing this stock to go down. The company did nothing wrong. Now is a great opportunity. If I liked it at $80, I really like it at $55. So it's one of those things. And confidence does that and a plan does that. So I really agree with that. The same as you. If I were to go back and start again, I would make sure I have a criteria that is simple and I understand and I can actually follow. Because having a simple and easy to understand criteria is great, but if you can't follow it, like it's pointless. Like there's all different metrics, there's all different numbers and stuff like that. So like you need to have something that you understand and you know why each of those numbers matter to you, whether it's PE ratio or the dividend streak or dividend growth rate or whatever it might be. You need to understand those numbers and understand why they're important. And then touching on, I think it was your last point about like running what you believe through like different groups and different people. That's very good. What you need to do with that is like, so Facebook groups are really good. Like I feel like that's like one of the best things about Facebook now is like the groups, because like the post or whatever, but like the groups and the amount of people that share the same interest as you do is really valuable. Just don't
Absolutely.
be one of the people that post on the group when you identify a stock. You're like, hey, Visa, what are your thoughts? Like put your thoughts. And you have to say, hey, I identified Visa as a good company. Here's the reason. Like justify it to yourself first and then see what other people have to say, because you need to build your own case, because in the wild world of the internet, there's going to be somebody out there that says it's the worst stock they've ever seen. Like it's
Right.
going to happen. So like if you and you have 4 other people that agree with you or whatever, if you can justify it to yourself and like the reasons that they might think it stinks, like if it's just 1 out of 10 people that say that stock is awful, but you have all these other reasons and they weren't able to like sway you in any one way that stock is now terrible for whatever reason, it's still good investment. Like you're never going to like, so even on my YouTube videos, I don't get 100% like rating on all my videos. Somebody has to leave a dislike all the time and it's fine. Like I'm not out here losing sleep at night because I know, oh, somebody out there on the internet doesn't like my video. Like they watched it anyway. I don't know. I don't know why whatever. But yeah, I think all those are really good points. I think those are really good tips for the new investor. Investing is a long journey. The get rich quick stuff never works. I don't care how many Instagram reels and whatever else you watch where some dude has a Lamborghini or whatever. Like don't believe in any of that stuff. Like it takes time. Good things take time.
Good things take time.
Yeah, and you just have to keep at it. And in 10, 20, 30 years, your hard work will shine through, and there'll be some kid that's 18, 20 years old when you're 55 asking you, how'd you do that, sir? Like, how'd you do it? So it's really all about that stuff. So I agree with it. Well, anyway, thank you so much, KY, for taking time to meet with us today. I learned a lot from you. I hope you enjoyed your time on today's show. And if you
Likewise,
have
man. Thanks for inviting me.
any closing remarks, go ahead. The floor is yours.
Uh, yeah, I mean, investing or dividend investing in particular, I think it's one of the best decisions that I've ever made. Even though my mom, I always have to mention my mom because she has, been my greatest, investment inspiration. But even though she has, always brought that up, this idea of starting to invest early, I wasn't really listening to her until right before the pandemic. Maybe whether I was, mature enough or, maybe the time just clicks at that moment. I feel that, it's always good for us to invest in dividends, especially because like we have all, we both mentioned earlier on that it does offer, a stable income, passive income, and it adds, extra stability, safety to our personal finances, personal wealth. So it does it does a great help for us. And if if our goals in the long term, like both of us, you and me, Troy, are trying to, live off our dividends, retire on dividends, then the earlier we start, the earlier we could reach our goals, our end goals. So yeah, that's about all that I want to share with all the viewers.
And that concludes another insightful episode of Dividend Discussion. I hope you found inspiration and valuable takeaways from our engaging conversation. If you're hungry for more dividend investing wisdom, be sure to subscribe to Dividend Obsession and hit that notification bell to stay up to date with my latest interviews, tips, and strategies. Remember, the journey to financial independence is a marathon, not a sprint. Keep applying the lessons you've learned and stay committed to growing your wealth using dividends. Together, we can create a community of dividend investors sharing knowledge and supporting one another. If you enjoyed this episode, don't hesitate to share it with other investors that are equally passionate about the power of dividends. Let's spread our dividend obsession far and wide. But until next time, see ya.